So here we want to analyze for you three pairs, and that is Gbpjpy, Nas100, and then gold. So let's start with the Gbpjpy. So we want to mark our highs and lows. So we have a low here, which is a wick, and a wick has to be filled, as we all know. So from this wick, that's where we want to look for trades when the market reaches down here. However, we must also mark that this is our high and the market is bearish because we have this bearish engulfing candle here to take price down and create a difference here. So once we have this, we have marked our potential highs and then our lows. So these are our highs, and then our lows. So we want to be able to trade by buying market at lows and then selling it at highs, as simple as that. So now we need to study how price is going to approach this low, and we can only do that when we come to the weekly time frame. So on the weekly time frame, the weekly candle closed bearish. We have a bearish candle closure, and then from here, what we could do now is to mark our highs and also our lows. So this is definitely our high, which is our resistance area. And then from here, we have a strong bearish candle break that has closed below this low, and then these are the low here. So that is what we call our price difference area. And that is where we would like to have a potential resistance area being formed here. Then from here, we can now know the market is bearish. So we could have a pull back into this region and then to continue a pullback here, and then the market to continue down, and then from here to buy. So this is the move we want to expect, but we need to understand how we are going to actually take advantage of this move, and that can only be possible on the lower time frame. So let's come to the 4-hourly time frame. So on the 4-hourly time frame, so this is our resistance area here, which the market has actually failed to break. And then now what we could actually have is a scenario whereby the market comes back into this price difference area, gives us another resistance, so a head and shoulders to head down to fill this wick. So when that is done, we can now look for another reverse head and shoulder here, or a support to be able to buy. So this is what we have on Gbpjpy. So the rest and all we just have to do is patience. Patience to be able to get the correct entry. Yeah. So let's go to the next pair that we would like to trade, and that is going to be Nas100. So let's use Forex FXCM. So Nas100, we want to also analyze it from the monthly time frame. So again, from the monthly time frame here, we can see we have a week, and then the week also has to be filled if market. So we have a low of the month, which is a week, and it has to be filled, and then we have a high of the month, which is also, and then we have another high here. So the reasons why we mark our highs and our lows is because we want to sell high and then also want to buy low. So from here, we can come to the weekly because we want to understand how price is going to fill up this week to come down to this low or these other lows here. So these are our potential support area. So if you look at this candle, it's a strong bearish candle break with its high here and its lower low here. So there's a difference, and this is where the difference is. This is our potential resistance area. So from here, we can clearly say this is our resistance here. We can come to the 4-hourly, and then we want to see how this resistance is going to hold price, because we can clearly tell here it has already been holding price twice, retested once, then twice. So we could see the third one. But what we want to see is if price pulls into this area and then gives us a head and shoulder or a resistance here, that is when we can actually trade it. Otherwise, we want to trade at these lows here. Meaning if price is able to reach to these lows, gives us a support or a head and shoulder, a reverse head and shoulders, that's when we can trade. If it doesn't happen, we will wait for it here. So you just want to wait for your pattern or your order block candle. It has to be here, down here, then you can be able to trade. So that's what we have on GBP on Nas100. So the next pair we want to analyze is going to be gold. So we want to see how we are going to trade gold this week. So let me just use the Rwanda data feeds on this case here. So let me wrap everything that is available. So we go to, let's start from the weekly. So on the weekly, How is gold behaving? So let's mark our highs, our lows, and our price difference area. This definitely is our high, which is our resistance. And then we have a strong break here, giving us this as our price difference. Now, the break here, this one has already been retested. So we want to trade at this low and then at this high. So for us to do that, let's come to a lower time frame, which is the 4-hourly. So on the 4-hourly, we want to study price. How is price likely to approach this low here? So you can clearly tell from this low here, we have a demand area. And then we have a strong resistance here, and then we have a strong bearish candle here. So this bearish candle has created a difference here. So this is another possible resistance area. So what we want to see now is a scenario whereby if gold fails to break here, and we have a strong bearish candle, we could actually have price coming down all the way up to here. And then from here, this is where we want to look for buying opportunities in case we get an inverse head and shoulder or a support formation along this region. So this is what we have on gold. These are the three markets in which we are going to focus on how to trade them this week. See you